Let's zoom out a little bit for our audience, because when the Schroeder's family signs away its 41%, they're closing one of the last chapters in a very exclusive book, the book of family-controlled financial dynasties. Let me paint the gallery for you and our listeners. You know this. Before today, you could count the major storied families on probably one, maybe two hands. There were the Rothschilds, two branches, Rothschilds and Company in Paris and then London. Then you've got the Lazards, founded in 1848 by three French brothers in New Orleans, of all places, the house that practically invented the modern M&A market. Still family influenced, now public. You've got Lombard Odier, founded in 1796 in Geneva, still a partnership, 7 generations, perhaps the purest expression of a family-run business that still exists. And then Pictet, Geneva as well, also a partnership, founded 1805, 1 year after Schroeder's, managing over 700 billion, the Swiss model, quiet, long-term, deliberately below the radar.
And the list is getting shorter, Alman. I mean, the graveyard is full of Warburgs, absorbed into SBC, then UBS, Barings, collapsed and then swallowed by ING, Flemings, bought by JP Morgan Chase, Hambros, Societe Generale, Kleinwort Bernson went from one hand to the other, Cazenove, which was bought over by Schroeder's, and then now is under the DYNASTY brand. So the merchant banking aristocracy of the city has been systematically dismantled over the past.
Ones that survived, Rothschilds went private, Lombard Odier and Pictet stayed in partnership. They chose structures, I guess, that insulated them from the sort of exactly this kind of pressure of becoming, as FT just called it, chauvin. Schroeder's tried to be a large, public, diversified, active manager. And that's exactly the species that's going extinct, when you say?
Absolutely. I mean, yeah, for all the reasons we mentioned earlier.
So here's what I keep coming back to. In 1804, when Johann Heinrich Schroeder walked into his brother's office in London, the entire financial system ran, Manu, on trust. Your name was your balance sheet. Your reputation was your capital. The Schroeders, the Rothschilds, the Barings, the Hambros, they built empires on handshakes and family honor. In 2026, the financial system runs on basis points, on AUM, on algo allocations. Trust has been disintermediated by data. It's not gone, but data is now the new king, and reputation has been replaced by fees. And 222-year-old family names are worth exactly $5.90 per share in a cash offer from Chicago. This is the story about an industry that no longer has room for the middle. Either you're BlackRock or you're a target. And I think about Bruno standing in front of that painting, talking about piety and poverty. He understood something that the spreadsheet can't capture, that some institutions carry a meaning that transcends market capitalization. Schroeder's was one of those institutions. Today, it became a line item on Nuveen's balance sheet. Manu, you spent 13 years inside that building. What's the one thing you want our listeners to remember?
Look, the great people built great things there. That culture of intellectual curiosity, of genuine investment craft, of caring about getting it right, not just getting it done, that was real. And that culture rarely survives a change of ownership. If you're an allocator listening to this, pay attention to the next 18 months. The talent will scatter. It happens all the time. And talent, unlike AUM, doesn't show up on a balance sheet.
No truer words have been spoken on this podcast. The last family portrait has been taken. The Schroeder's family walks away with £4 billion. I suspect they'll invest it wisely. The final irony of the active management era.
To your listeners in London, New York, Singapore, Tokyo, Sydney, Buenos Aires, this deal closes in Q4 2026. What happens between now and then will tell you everything about whether consolidation creates value or just creates size.
Stay curious.
Stay purposeful.
And as Zubin would say, stay drip. Thank you for joining us.